all about stocks this week. Volatility witnessed on Dalal Street, but both the Sensex and the Nifty close in the green on Thursday. We tell you what to do with your investment strategy next week. IT stocks in focus as they deliver strong Q4 earnings. We'll tell you which stocks you should bet on in this space. And our guest this week, G. Chokalingam, will be giving you 2 top stock recommendations for the long term. Hello and welcome to All About Stocks. I'm Avan Dabash and this is a show specifically meant for all long-term retail investors. So over the next half hour, we'll tell you what your investment strategy should be in these confusing and volatile markets and which stocks will give you the best returns in the long term. Not just that, we'll also be answering all of the questions that you have sent in to us during this week. Now just remember, here's our email ID as well as the Facebook page that you can send in your queries on. Well, let's start off the show first up by bringing in my colleague Ajay Sharma, who joins in from our research team to give us a wrap and an update on all the action on Dalal Street this week, as well as give us the highlights of the big earnings that came out as well. Ajay.
Well, it was a truncated week for the markets, but a very interesting one in the sense that we did see closer to 6,800 on the Nifty for one, and on the downside we even gave up that level for the moment. So these 3 days were extremely volatile. On a net basis, the benchmark indices along with the broader markets ended flat, but they were full of volatility. If you talk of sectoral gainers, ITC and United Spirits, of course, led the charge as far as the FMCG index was concerned, and hence it was the best performing. IT also was very volatile. Infosys did sour the sentiment for some time, but improved numbers from the likes of HCL Tech, good commentary from TCS, and even Mindtree lifted the sentiment. Oil stocks also going quite smartly this particular week, led by Kane India and Reliance. Banking stocks were slightly on the weaker side because of the macro data turning weak. CPI, WPI both inched higher and soured the sentiment, even raised the fears of a possible rate hike because of sticky inflation. Also, global cues played a very important part in that, and on the end of the week, which is on Thursday, some support coming in from global cues actually improved sentiment on the street. Real estate was massacred this particular week, led by, of course, DLF, which shaved 10%. So that, along with capital goods stocks, had a bad week. But some optimism returning to the market ever since the phase 5 of the polls saw actually a good turnout, also was responsible for some arresting of the weakness as far as markets are concerned. Going forward, progress on polls and how the Q4 earnings pan out from here on after the IT numbers out of the way is something traders eye as cues for the further direction for the market. Big area this particular week was the large cap IT, all 4 of them declaring the numbers. As we said earlier, Infosys did sour sentiment for the moment, but of course there was some improvement seen in the stock prices later on. Revenue growth, of course, was slightly on the lower side, but there was margin expansion if you talk of Infosys. When you come down to TCS, you would see that revenue growth was more or less in line with what the street was estimating, but margins were slightly under pressure. But what market took note of most was a positive guidance or positive commentary for fiscal 15. And this was pretty much the scene with the HCL Tech as well, which of course triggered a short covering in IT stocks. Revenues were in line, margins slightly under pressure, but very comfortable guidance around what NASSCOM has spoken about for fiscal 15. As far as Wipro is concerned, revenues were in line, margin expanded, but fiscal 15 outlook remains strong. So what you can derive out of the numbers from IT sector is that fiscal 15 remains a relatively promising environment. That's what everybody is talking about, to land 13 to 15% revenue growth, what NASSCOM has spoken about.
Thanks for that, Ajay. Now let's get in our fundamental expert who will be joining in today on the show over the next 30 minutes. We have Mr. G. Chokalingam, founder, Economics Research and Advisory Private Limited. Thanks very much for being with us, Mr. Chokalingam. Now, to start off with, of course, it has been fairly important this week in terms of the big earnings that have kick-started. We do have the momentum of the markets. It has been fairly volatile as well, but I was chatting with you a while earlier, and you said that you're fairly bullish. So do you think that the undercurrent is certainly positive and there will be certain bumps along the way?
Certainly. I mean, last 6 years, the market was struggling to cross 21,000. And we had a bout of negative new developments. But in my view, we are set for a 2-year bull run because if you look at the rupee depreciation, which is about 50% in the last 6 years, is going to help us a lot on export front. And secondly, if you look at last 50 years of GDP growth, India never remained at a very low GDP growth for more than 2 or 3 years in a row. So now I think the time is set for the GDP to improve with possibly political stability, which we are expecting. And I don't see any political risk also, because if you see last 30 years of Lok Sabha results, only when these two national parties had a huge difference in their individual tally, you had a lot of political instability. Otherwise, there has been a lot of stability. So considering all these developments, I believe that we are set for a massive bull run for next 2 years.
So that's a fairly positive outlook. But Mr. Chokkalingam, if we were to talk specifically about the IT basket, now the earnings here have been nothing short of impressive, be it HCL Technologies that delivered a good set of numbers, TCS and the entire lot. Do you think that there is potential value within the IT basket, or is this just a one-off?
No, it's certainly not a one-off. In the current fiscal also, the IT sector will outperform. See, the market has got nervousness because the rupee appreciated by 2 rupee against the dollar. But you have to see a larger perspective. If you see in the last 6 years, as I said, the rupee has depreciated by 50%. On the other hand, there is a revival of US economy and Eurozone is coming out of the recession. So when you put all these facts together, there's going to be tremendous opportunity for the IT sector. In fact, NASSCOM is talking about 13 to 15% growth for the current fiscal in IT exports. So, and also if you see in the last 2 years, there has been no upgradation in the valuation multiple for IT stocks, whether it is a mid cap or large cap. We have seen almost 400 to 500 basis point improvement in the valuation multiple for IT stocks. Now with the kind of economic growth happening and the market outlook also improving, and hence overall market PE also will improve. So in this background, I would see again another at least 200-300 basis improvement in the valuation multiple for IT sector. So considering the business outlook as well as scope for improvement in the valuation multiple, the IT sector will play out in a very big way in the current financial year as well.
And Mr. Chokkalingam, finally, from the earnings season this time around, what are your expectations as to where we're going to see the surprises coming in and the disappointments?
Yeah, certainly the March result, there is not going to be a major difference as compared to December results, but the difference would be in terms of overall improvement in the profit growth for the entire corporate sector. There would be about 10% growth in the earnings for say Sensex stocks year-on-year basis. Secondly, like December results in the March quarter also, IT stocks and pharma and FMCG would do well, and there could be surprises from certain mid-sized companies. But otherwise, I don't see any major surprise, positive surprise from PSU banks or from construction or the capital goods sector, and therefore I would say that the current rally can be used to book partially profit in the momentum stocks and particularly the rate sensitive stocks other than the private sector banks.
Okay, that's the call coming in on the overall earnings trajectory and what all we can expect this time around. But let's take it straight then to the stock queries that you've sent in on the show. First up, Vandana has sent in a query. She's saying that she holds 10 shares of Infosys at an average price of 3,114 rupees and now wants to know whether she should hold on or sell. Now, Mr. Chokkalingam, you did have a great set of numbers coming in from Infi this time around. Do you think that Infosys is out of the woods as yet?
As I said, I have a very positive outlook on IT sector. So I would suggest all the investors to hold on to all, large IT stocks like Infosys. In fact, they're given the guidance up to 9%, but I think they can even outperform that. The year-on-year profit growth for the current fiscal can be even 10 to 11% for Infosys. And therefore, I would suggest investors to hold on to Infosys.
Let's move on then to the next query. Of course, it's a hold call coming in, given that he's by and large positive on the IT basket. Karthik Mahadevan's query saying that there are 100 shares of TCS at an average point of 1,600 rupees that he's purchased it at. And now he wants to know if he should hold on or if he should sell. Once again, TCS did come out with a good set of numbers. In fact, the management also said that they're confident of beating the NASSCOM guidance. They've won quite a few contracts in Europe and the US this time around. What would be your advice to Karthik?
Same set of argument, but here only difference is that it would be able to beat not only NASSCOM forecast, even Infosys performance going ahead. So my conviction is more for stock like TCS.
Okay, that's the word of advice coming in on TCS. Finally, moving away from the IT basket, let's focus in on the banking space. IndusInd Bank was our third query, and Sanjay Patil has sent this to us. He holds 17 shares of the stock at a buy point of 277 rupees and now wants to know if he should hold or sell. An impressive set of numbers this time around from IndusInd. Net profits rising by something like 30%. What would the advice be and what are the target prices, Mr. Chokkalingam?
Certainly, it's a great bank. It will continue to do well. But in a relative performance, I would suggest selling IndusInd Bank and buying Karur Vysya Bank. Even HDFC Bank, for the first time, it could not maintain 30% year-on-year profit growth after 52 or 53 quarters. That's because of the base effect. Similar logic will hold good for IndusInd Bank. It would be very difficult because the base has expanded a lot in the last 2-3 years. So this kind of growth is very difficult for them to maintain. Secondly, if you look at the valuation multiple, Karur Vysya Bank is half the multiple of IndusInd Bank. And Karur Vysya, I think it has set for a very solid recovery in the performance because it has set up almost 150 branches in the last 2 financial years, which is nearly 1/3 of the number of branches they have set up in the last 80 years. So that has hit their margin apart from the slowdown in the economy. So going ahead, Karur Vysya will start improving its performance substantially, and therefore I suggest making a shift from IndusInd Bank to Karur Vysya Bank.
Okay, let's get started off then with the Portfolio Advisor segment, and our viewer query comes in from Anil Bhasin, and here are the following stocks that he holds in his portfolio. First up, there's 10 shares of Axis Bank at a buy point of 1,408 rupees. What do you think he should do with this, Mr. Chokkalingam?
He should hold on to Axis Bank. I am very positive on the private sector banks, particularly the large banks like Axis Bank, and therefore he should hold on to it.
Okay, so it's certainly a whole recommendation coming in on an Axis Bank. Let's talk about an HDFC now. This stock has been a fairly slow mover, one of the promising stocks within this basket, but he's bought 10 shares at 870 rupees, Mr. Chokkalingam. You think there is more steam here?
The steam is there, but in relative terms, I think it will have problem because, one, we have seen the slowdown in the housing sector, and two, even a lot of banks have shifted to the housing loan financing business. And considering all these facts, I think you would be better off by selling HDFC and buying a bank like a Karur Vysya, which I covered earlier.
Okay, more promise in a Karur Vysya vis-a-vis an HDFC, but what about capital goods? This space has generated so much attention. Do you think it's just a hope rally because he's got 10 shares of L&T and his buy price is 1,260?
Of course, L&T is a great company, no doubt, but it's trading at around 19 to 20 PE on 1 year forward earning. And I would, find it difficult to digest this kind of multiple for capital good company. And it's even if a new government comes in, the growth is not going to be improved within a quarter or two. It will take minimum 2 quarters for the economy to start showing any credible improvement in the GDP growth. So therefore, I would suggest sell on L&T and buy very defensive item like ITC.
Finally, he's got just about 25 shares of an IDFC, a stock that has seen a lot of promise of late, and he's purchased it at close to 130 rupees. What is it that you would be telling him? Because the stock has declined off late to levels of close to 118.
He should hold on to it. NPAs are minimal. That gives a lot of comfort, and plus the latest development of banking license order would also play a positive role for the stock. So therefore, you should hold on to it.
Okay, Anil, that's the word of advice coming in on the entire portfolio. So hope we had Mr. Chokkalingam answer all of your queries. Time for a quick break right here on All About Stocks. But stay tuned because after the break, Mr. G. Chokkalingam will give you 2 top stock recommendations for the long term. Welcome back. Still tuned into All About Stocks. Now, G. Chokkalingam, our fundamental expert, is still with us on the show, helping us figure out a strategy for your long-term portfolios. And he's given us some stock recommendations that we can look to invest in at current levels in order to make long-term returns. Now, Mr. Chokkalingam, the first recommendation is Piramal Enterprises. This one has certainly been in the news for all the right reasons of late. But take us through why you've picked out this stock at the current level.
It's a good long-term bet in my view. For the reason is that, first of all, the management is extraordinarily brilliant. They have already shown their ability in terms of selling the pharma business at a phenomenal valuation to foreign company. Later, they bought out Vodafone shares and they made thousands of crores of profit. And they continue with the investments in various areas. They have invested in, again, pharma, healthcare business. Particularly in healthcare information management business, they have made huge investments. In my view, that will unlock a lot of money in the future. And sitting on huge cash and, on the one hand, they have about 5,000 crore of investments, which will unlock money. And then now, almost close to 300 rupees of 300 rupees of cash per share they hold without incorporating the money they are going to receive from Vodafone. And therefore, I believe that in next 2 to 3 years, there will be a lot of unlocking opportunities from this company, which will definitely take the stock to anywhere from 60 to 100%. But however, I would like to be conservative with a conservative target price at this moment.
So what is the target price that you would advise?
Around 720. I want to be very conservative, but if somebody has even 3 years view, it could be even a multi-bagger idea.
And the second stock you've picked out is a Shishasiya Paper and Boards. Run us through why exactly you've picked out this one. We don't hear the name very often, fairly illiquid. Are there any select fundamental reasons that you've picked out?
Yeah, certainly. I mean, if you see a lot of multi-bagger ideas, at some point in time they were unknown. Even Wipro used to be unknown in early 90s for many investors. Of course, I'm not comparing Shishasiya Paper to that kind of company. It's a very low-profile paper company, which is one of the most efficient paper company. And very interesting fact is that promoter stake is only around 45%. Already we have seen acquisition of Andhra Pradesh Paper by International Paper Corporation. In fact, they also mentioned after acquiring that company that they are looking for more such acquisition possibilities in India. And I firmly believe that from my economic understanding that there will be a lot of asset buying by foreigners through FDI as well as indirectly through the stock market in the next 2 years. Because rupee has, as I said, depreciated by 50% in 6 years, it's going to lead to a lot of structural change in the Indian economy and stock market. And if you look at the Shishasiya Paper, its enterprise value is 1/3 of or 1/4 of its replacement cost. And also, if you look at paper industry for last 15 years, you have seen hardly any new greenfield project. At the 60 rupee dollar, it is almost impossible for anyone to import capital goods and set up a new paper plant and make a profit. The depreciation and interest cost itself will eat all the entire gross margin. And also the promoter holding is held by a large number of individual investors. So considering these fundamental reasons and tactical reasons, I believe that the stock is worth at least 260 rupees. But any chance there is any acquisition, then it can be a multi-bagger. However, I would give you a word of caution. This is not meant for short-term investors. Only those who can look at investing in this company for next 1 to 3 years should consider this stock.
Okay, so those are the stock recommendations that Mr. Chokkalingam has for us. And of course, we'd like to remind all of our viewers that if you have any queries, do send them in at the email ID at the bottom of your screen. Well, let's take on board then some more that have been sent in earlier. Sajid Khan's got a query on Reliance Communications. 1,000 shares is what he holds of the stock. His buy price, Mr. Chokkalingam, is close to 88 rupees, and now he wants to know if he should hold on or sell. And RCom2 has been in focus, raising of the coal tariffs by something like 20%. What is it that you would advise, given that off late the news has been a little negative as well?
Even I should certainly suggest that he should hold on to it, because if you see the development, with Reliance Jio. Earlier we had seen, sharing the towers. Then we saw sharing intercity cable. Then finally intracity cable. Now the media says that there is a possibility of even sharing the retail outlets. And Reliance Telecommunication has got about 3,000 retail outlets. In my view, if it becomes true, sharing retail outlets with Reliance Jio, in fact, this company can create again wealth in terms of, possibly a merger. This is my just, based on this logic of sharing retail outlets with Reliance Jio. Earlier they created wealth for the investors by demerging the companies. Perhaps again they may create a wealth by merging these two, because the way they have been sharing the infrastructure and as per the media even willing to share the retail outlet, I believe that there could be a good upside possibility if there is any marriage of alliance. Apart from that, we also seen the tariff for the telecom businesses consolidating, and there is a scope for further upside in the tariff, because the penetration of mobile phones already peaked out, and with the mobile penetration which used to grow 50-60%, now hardly growing at 5%. So therefore all the industry players will be forced to go for tariff revision, which will also be positive for Reliance Telecom.
But let's slip into another break right here on the show. After the break, we'll be reviewing Mr. Chokkalingam's own portfolio, and we'll tell you how he outperformed the Nifty by almost 8%. Great to have you back with us on All About Stocks. Now, Mr. G. Chokalingam, our fundamental expert, is still with us on the show, and he's helping us making money in the long term. In fact, on the 8th of August 2013, he had joined in on the show and given us an overall portfolio that he had selected with individual stocks. Now, interestingly, the total gain on his portfolio came up to 27.9%, whereas the Nifty returns from the 8th of August have been close to 20.4%. So he's managed to impressively outperform the index as well by picking out some select stocks that he thought stood out on the fundamental side. So here's what he selected in his portfolio. There was ITC from the FMCG basket, Hindustan Zinc, Reliance Industries, you've got Bosch from the mid-cap basket. There's also an Oracle Financials. Heritage Foods was a stock that he selected. Apart from that, Clariant Chemicals, City Union Bank, there was Emphasis from mid-cap IT, Karur Vysya Bank, which is pretty upbeat on still, as well as the Tata Coffee, Obama Lorry, Moil is what he selected in his portfolio, along with the Tilak Nagar Industries and a JK Tyre, and the tyre basket has certainly done phenomenally well of late. Now, Mr. Chokalingam, your portfolio has outperformed the Nifty by almost 8%. Do you wish to make any changes?
I would like to retain, except, I'm sitting on a lot of cash now. It's almost 16% in the portfolio. So, therefore, I would add 3% to ITC, another 3% to Hindustan Zinc, and increase their share in the portfolio from 5 to 8%. And also, I would aggressively add another 3% to Moil. I am very bullish on this stock. I believe that, the company would be ending this financial year FY14 with almost cash equivalent to 70% of the current market cap. And also, the company has, got another 540 hectares of new mines in the state of Maharashtra. So, and also, if you look at this company's IPO, about 4 years back, it came out with IPO at 375, whereas now stock is around 250. So I believe that post-election, there is a possibility of any special dividend or buyback. So considering these facts, I would increase it to 10% of the portfolio. These are the only 3 changes I would like to do.
Okay, that's the call that Mr. Chokalingam has on his portfolio. He's choosing to retain the stocks. Let's give you a quick glimpse of his recommendations. ITC, Hindustan Zinc, Reliance Industries, Bosch, Oracle Finance, Clariant Chemicals, City Union Bank, Emphasis, Karur Vysya Bank, there's Tata Coffee, Bama Lorry, Moil, Tilak Nagar Industries, JK Tyre and Heritage Foods. Mr. Chokalingam, thank you so much for taking time out and joining in with your fundamental expertise and helping all our viewers out with their queries. And of course, to all of our viewers, keep sending in your stock queries to facebook.com/allaboutstocks. With that, we'll see you same time next week. Thanks for tuning in.